edition.
Now, away from that, Bank of Uganda is banking on a mobile solution and offshore indices to grow trade in government bonds through engaging with retail buyers. Retail buyers can now buy T-bills and bonds offered by Bank of Uganda through their mobile phones, with or without a bank account through the Saving mobile platform.
Bank of Uganda lowered the minimum investment amount for bonds to $27.7, lower than Kenya's M Akiba, which traded at $30. To make it attractive for retail investors and dilute the dominance by banks on offshore indices, investment advisors say that they help in tracking and measuring the total return of emerging market bonds that meet specific liquidity and rating requirements. Uptake says they are targeting to have their bonds quoted on Bloomberg African Bond Indices, ABABI, Financial Times Stock Exchange, Frontier Market Index, and the JP Morgan Emerging Market Indexes. Asset managers in Kampala say quoting securities on offshore indices has taken root in emerging markets that were once considered inferior, but now outperform bonds issued by highly rated insurers and government in developed economies. Uganda has been working towards having its securities easily traded by offshore investors following the enforcement of the master agreements and safeguards that the interests of financial institutions, especially when dealing in transactions involving repos and swaps. Bank of Uganda says this has boosted non-resident portfolio inflows into the country, which reached $364.3 million in 2020-2021. The non-resident holdings of government bonds have also grown, reaching $806.2 million by November 2021. Uptake says that the securities are tradable on international platforms such as Bloomberg and Refinitiv. The transactions traded on these automated platforms are 20% of the total secondary market transactions. However, statistics from the Capital Markets Authority Uganda shows value of government bonds traded on the secondary market fell by 23.8% to $2.2 billion in the fourth quarter of 2021 from $2.9 billion in the third quarter of 2021. The capital markets regulator attributes low investor appetite for government securities to the focus shifting of investors' capital in MTN Uganda Limited's initial public offering, which opened on October and closed on November last year. This also shows that the high dependence of government securities in the hands of a few investors has a risk